Question number 2, Jono Naylor.
Thank you, Mr Speaker. My question is to the Minister of Finance. How is the New Zealand economy placed to be resilient to international economic fluctuations?
The Honourable Bill English.
Mr Speaker, the New Zealand economy is well placed. First, we have a floating exchange rate which can assist to smooth the domestic implications of international volatility in global markets. Secondly, we have a clear monetary policy framework which includes the Reserve Bank's authority to adjust short-term interest rates as it judges appropriate. Thirdly, a program of microeconomic reform over recent years means that our industries are in a better position to adjust quickly and adapt to changes in international market conditions. And fourthly, New Zealand households have had a positive net savings rate for 5 years. Household bank deposits have doubled since 2007, and the government is on track to surplus and keeping government debt levels low.
Supplementary.
Supplementary question, Jono Naylor.
How do New Zealand's exchange rate policy settings support the resilience of the New Zealand economy?
The Honourable Bill English.
Well, Mr Speaker, we see around the world, alongside fluctuations in share markets, continuing decreases in commodity prices. And we know there's recently been a substantial fall in dairy prices affecting New Zealand. The global dairy trade index remains 39% below its March peak. However, there have been some offsetting factors. The exchange rate has fallen around 25% against the US dollar since mid-2014. This lower exchange rate will provide some cushioning for the effect of lower dairy prices, but just as importantly, it will assist the profitability of other industries that have no connection to dairy at all, such as tourism, now our largest industry, which was forced to become more efficient when the exchange rate was 88 cents US, and of course is now able to expand and become profitable with the exchange rate significantly lower.
Supplementary.
Supplementary question, Jono Naylor.
What other factors support resilience in the New Zealand economy?
The Honourable Bill English.
Well, Mr Speaker, our households have been, in the last 6 or 7 years, been through a considerable process of adjustment. Many of them have decreased their debt. Many of them have been very careful about the new debt that they might incur, and they've increased their savings rates. They've also been dealing with relatively low costs of living, and they've been careful with their consumption. Alongside that, our businesses have seen quite high rates of business investment. In fact, it's been 6% growth in business investment per annum over the past 4 years, which means firms are in a reasonable position now to take advantage of favourable factors such as the lower exchange rate.
Supplementary question, Grant Robertson.
In light of that answer, by how much has net government debt grown since he became a finance minister? If he doesn't know the exact answer, it begins with 60 million.
The Honourable Bill English.
Well, Mr Speaker, net government debt has grown because the government, and it has grown quite a bit, because the government has taken a policy approach of adapting to the circumstances, rather than being paralysed by the notion that every week is a crisis. That's right. So when we had a global financial crisis, which was a real crisis, and major earthquakes in Canterbury, which were a crisis, we borrowed money to fund our way through that. And the good news is we're on track to surplus. We will be able to stop borrowing more money.
Point of order, Grant Robertson.
Mr Speaker, in light of the Minister's answer, I seek leave to table Statistics New Zealand figures showing that net debt has increased by 60...
The member will resume his seat. Statistics New Zealand's available to all members. Supplementary question, Jono Naylor.
What reports has he seen on the outlook for the New Zealand economy?
The Honourable Bill English.
Well, Mr Speaker, there's any number of reports of people who are looking out through the events of the last few days, including the Treasury and the Reserve Bank, where their reports indicate economic growth is expected to be around 2 to 2.5% per year over the next few years. That's a sort of moderate, sustainable growth that translates into higher wages and more jobs for New Zealand families. We've yet to see whether news over the last week or so of decreases in stock markets around the world will make some difference to those growth forecasts, but it's not obvious that they'll make a big difference, nor that it'll make a difference soon, but we can only wait and see.
Question number 3, the Right Honourable Winston Peters.